The stock market is about to close in about 4 minutes. As we're looking at the charts here on major indexes, it was kind of a mixed day. Mixed because we have the Dow Jones, which is the biggest loser today. Not the biggest loser, but in terms of major indexes, losing 105 points. Nasdaq was way upper than what we see currently. At a point, I think we were even above 1%. Same thing with the S&P, but kind of flat for these two, but oil is really one of the biggest sectors headed today with the red sea, the red color, which is the. So what happened today? As you can see, the ETF here, this is the Energy Select Spider Fund. It was down even further down than what it is currently trading at right now. And I think this is due to the fact that the OPEC organization, meaning the major producers and exporters of oil over the world, decided to be, on this trend where they will make sure to keep the production as low as possible in order to drive energy price, oil prices to the uptrend. This was a little bit, questioned by analysts and experts on the energy side because Iran, being part of that OPEC Plus organization, sent a big shipment to China. So it means if Iran is sending a big shipment to China, maybe they didn't really respect the guidelines and the agreement that they made last month in terms of keeping the production low, and this may potentially be troublesome for the demand and for the outlook, at least for the short term, because we all know oil is on an uptrend. As soon as airplanes, cruise lines, people will start flying again, and we've seen that already happening in the last month with the numbers of passengers averaging 1.3 million. So it definitely on an uptrend. So this is basically what is moving the oil market today. But Centennial Resource is one of the most affected stocks today. So it dropped at a point, it dropped 20%. So if let me refresh here to see where it is trading at. Yeah, so currently at 18% down, but at a point right here at 470, it was 20% on a single day. This is crazy because this is a stock that has been continuously going up and up. I bought this at 198 a couple of months ago. I'm already up 104% on this, but I mean, if you look at it, a few weeks ago, it was trading below 4. And then at a point, we went all the way up to 620. Yeah, 625 here, the 52-week high. So to me, it doesn't make sense, and we'll go into the details right now. So basically, Centennial Resource decided to make an offer. They decided to raise money in order to repay the debt that they have for the 2025 maturity. So basically, this is what they did. If you look at the article right here, Centennial Resource Development, is it the right one? No. Let me give you the exact way of the article here. So basically, this is it. They had a maturity date due in 2028. So they decided to raise $150 million worth of exchangeable senior notes due in 2028. A portion of the cash raise will be used to repay a note coming due in 2025. So 3-4 years from now, extending the company's maturity profile. So instead of having to pay the debt in 2025, they will have to pay it in 2028. So repay the portions of the revolving credit line. So in some way, this is a good move for the balance sheet. Why? Because they are paying the short-term debt and moving the maturity forward to 2028, meaning for at least 5-6 years, they won't have to pay any of this maturity, and the money that they will raise, especially within uptrend in the oil demand, they will definitely use that to repay the investors, to repay the stockholders. But why is this concerning? Because some investors are likely fearful that Centennial will issue a stock in exchange for the notes, as it is allowed to do in certain circumstances, thus diluting current shareholders. Meaning, if by raising the money through debt, sometimes some companies will do that by, exchanging or offering shares. So what investors will buy share, it means we'll have a bigger number of outstanding shares that will potentially dilute the share price. But never in this article or in Centennial company's website, it is mentioned that they are offering shares. It's just, you know, a note offering, meaning they are getting into $150 million debt in order to repay the 2025 maturity. So to me, this is just an overreaction. As sometimes people, I mean, investors will tend to either misunderstand or read or interpret some news coming from companies, especially when it's not as positive as, we'll wait. So to me, the 20% down on Sentinel today is just an overreaction. And as soon as I've seen that, it was dropping, I bought 4 times today. I bought 1,000 shares at 504, bought another 1,000 shares here at 489, bought another 1,000 shares right here at 475, and at 470 bought another 1,000 shares. So I basically doubled on my 4,000 initial position that I initiated in January. So this is definitely a buy the dip, and I'm really confident that as soon as tomorrow, especially with the EIA numbers, on the draw and the production for the last week, we'll definitely see Centennial jumping back again. This is a deja vu to me. This is a deja vu to me. It did happen a couple of months ago where it dipped, I think, 15%, and the next day it was back up 20% up. So this is definitely something you want to do when a stock like this dips, because we all know that the energy sector will definitely be one of the best gainers in 2021. So that's it for it today, guys. Let me know what you guys are thinking about this news of Centennial raising money, and if you own the stock. Otherwise, if you don't own the stock, please consider buying this, especially with this 20% discount. All right. Thank you guys for watching. I will see you in the next one. Take care. Bye-bye.